Kendrick, we have seen great significant shifts of how monies are moving around the world globally. When you look at payments, what do you see the payment landscape in 2026? What are biggest opportunities? What are the big five trends?
What's really exciting right now is just how much the payments world is expanding. We're talking about 411 million people who've gained access to financial and banking services recently. And they're not just getting bank accounts, they're jumping straight into um, more diverse financial services. Here's what's really interesting. Card payments are scaling up fast, and especially with mobile commerce taking off, we're looking at additional $20.5 trillion in card payment value expected between 2025 and 2030. And mobile e-commerce alone, that's adding another 6.6 trillion by 2030. But let me break down the top 5 trends that we're watching closely this year because each one tells a different part of the story. So, first, we're seeing a breakthrough in digital currencies, both in terms of investment and how they're being used. Second, we're seeing rapid expansion of credit globally. Third, we're seeing more rebalanced growth across Asia Pacific. Fourth, as mentioned before, we're seeing the rewards of financial inclusion efforts. And then finally, we're seeing a big focus on converting the remaining B2B uh, payment opportunity. So, firstly, digital currencies, we're talking both about stablecoins and central bank digital currencies, really taking the stage and advancing quickly. So, I wonder, David, what does this breakthrough mean for established payment players?
I can see that the central bank digital currencies, also called CBDCs, are getting attraction for some of the pilots, especially driven by the BRICS markets. Whereas the stablecoins are largely driven by US with the USD stablecoins, but nowadays also getting attraction into Asia Pacific, Europe, as well as Middle East, especially meaningful for the B2B cross-border transaction, but also see some of the interesting applications for the gaming and travel consumer applications. In my opinion, it not only help to reduce the business cost and time for the cross-border transaction, to release the liquidity strains. But at the same time, we believe that for the businesses, merchants, it will also make more convenience. And also for the issuers and the car operators, that means a new business model for the loyalty, for the reconciliation, and help them to reduce the cost. But at the same time, we believe that the competitive pressure is rising. So for the established players, that if they fail to integrate stablecoins into their currency capabilities, that means they'll face the high processing cost, less competitive with the fintechs, at the same time with a declining relevance into the future next generation payment networks. Now, we have discussed the future payment rails, but also with that, consumers are having a high expectations of established payment products. And credit cards is at the core attention. So Kendrick, we wonder right now, what is the core driving factors for the credit cards payments?
Credit is expected to become the leading card function by payment value for the first time since roughly 2008, 2009. This is being driven by two competing forces. One is increased utilization in developed markets where consumers are dealing with inflationary pressures, causing them to spend more and extend their credit a bit further. On the other hand, we're seeing in emerging markets more consumers than ever have access to credit cards. So both at the top, both in emerging and both in developed markets, we're seeing credit rising quickly. We're also seeing card issuers get more creative with card loyalty and reward programs um, that are more effectively segmenting consumers by what drives them to adopt a particular card function. For merchants, the use of more credit spending can drive credit-linked incentives like increased cart size, travel bookings, ticket value, and it's really led to more collaboration between payment players and merchants. So really, as credit accelerates globally, there definitely is one region that stands out for its ability to really drive overall global card payment growth, and that's Asia Pacific. So, David, how is this growth evolving within the Asia Pacific region?
Due to the large volume of the businesses and populations of the consumers here, Asia Pacific is definitely driving the scale of global transaction, especially we contribute more than half of the card incremental value. But you may wonder whether is China is still the driving force behind. I would say it is, but the growth speed is being slower down. It's given the level of adoption of cards plus the popularity of digital wallets there. I would say in contrast, it's more emerging markets such as India, Vietnam, Philippines are the ones driving the growth. Having said so, we have also to notice that some of the unique differences in this region, especially the mobile-first ecosystem, for example, the super app such as WeChat Pay, Alipay, KakaoPay in Northeast Asia, and Grab, Gojek, Lazada, Shopee in Southeast Asia, for example. These are really deep embedded into consumer lifestyle. And for international payment networks and issuers, they really have to localize and integrate with those local super apps, plus the product design and make it relevant to them. And also maybe more competitive, differentiate with more engaging reward formats. With that, we have talked about the established credit card products and the most important region, APAC. We can't also not ignore the bottom of pyramid in terms of the outbound underserved consumers. So financial inclusion is also critical. Kendrick, so what kind of dynamics that the payment players should pay attention to this financial inclusion?
Yeah, I mean, over the last 5 years, the number of fully banked individuals in key markets has really grown substantially due to mobile-based financial services and also government-supported digital payment systems, which just in general make it easier for consumers to adopt financial services. Instant payment infrastructure in certain markets demonstrates how these low cost platforms can rapidly shift both consumer and merchant behavior toward digital and electronic payments. But despite all the gains, there is still significant unbanked and financially underserved consumers. So there's going to really need to be a greater focus on financial literacy and not just financial inclusion. It's important to remember that, like for networks, issuers, and merchants, inclusion translates directly into new transaction volume, more diversified spending profiles, and really improved data visibility for underwriting and loyalty.
Good point. Sounds exciting, and I believe there'll be very competitive environment in the consumer payments. Now let's shifting our focus to one of the largest efficiency into the payments, which is the B2B. I would believe it's still a lot of inefficiencies there. Commercial payments is still relatively heavy on the payments in many markets. So Kendrick, what do you see the biggest opportunities in terms of B2B in 2026?
The commercial paper payment opportunity is roughly twice the size of the consumer payment opportunity. So there's really been a shift in the industry to focus on converting that commercial payments. Currently, only about 3% of total commercial payments takes place on a financial card. So it's really a very underserved payment segment. So we're seeing lots of investment in developing complete platforms. So think about how consumer payments were converted to cards, hyper personalized, targeted rewards. And we're seeing platforms start to develop based on the size of the merchant and the particular industry that merchant is in. We haven't necessarily seen it completely yet, but we're seeing a drive to make more complete commercial platforms, particularly targeting small and mid-sized businesses.
What final recommendations or advice would you like to give to our payment businesses for their prioritization in 2026?
Well, the first would be prepare for digital currency, both in terms of acceptance and facilitating cross-border settlement and programmable loyalty, and for treasury efficiency. The second would be to enhance the credit proposition of the credit card loyalty and reward program. We were talking about hyper personalized rewards that come from targeted merchant partnerships and really innovative premium offerings. Third, anchor any regional strategy in Asia Pacific. The majority of card payment growth is going to come from this region over the next 5 years. Fourth, invest in financial inclusion ecosystems, especially in mobile-led markets where the first time consumers are going to interact with financial services is on their mobile device. And then finally, capture the B2B payment opportunity. We're looking for more complete strategies that include covering business operations, cash flow support, and really targeting the rewards for merchant size and the specific industry they operate in.
Thank you, Kendrick, for the advice. And for our audience, if you want to explore what are the specific business implications to you or any other questions, feel free to reach out to us. Thank you.